The software market is crashing. Is it oversold or just the start of something bigger? MarketBeat's Thomas Hughes is here to talk about 4 software companies he believes are oversold and could be ready for a rebound. Thomas, we've got a kind of contrarian look at what's happening in the software market right now. We're going to get into the 4 names that you are still looking at right now, even as the market's going down. But before we get into those specific names, let's just talk about what's happening in software as a whole. This crash is kind of everywhere right now.
Well, right. The market is kind of, looking at AI as a disruptive factor for software stocks. If you think that AI is this computer smart enough to write its own code, and these companies like Anthropic, which are adding new services to their offerings, there is potential for software stocks to be disrupted. But I think that as far as like a system-wide, sector-wide implosion, it'll be years in the making for these companies to have built up their services to the point where they can really disrupt the market that well. In the meantime, we have these specialists who are leading their sectors within this sector, whether it be with, back end or front end, client data, whatever it is, still leading, but also offering plenty of AI services. So it's really a question of chicken or the egg, forest or the trees. AI is disruptive, but is it going to disrupt the entire industry? It's not going to be as bad as the market is fearing right now, I think, because many of these software companies are also AI companies. Thinking about, an AI model that's adding services, it's going to disrupt the entire industry. Let's look at Salesforce. Salesforce has been a leader in AI and machine learning from its very inception. So it's really an AI company to begin with, offers plenty of AI services. But one of the things it's been doing is expanding its integration with the models. So as a consumer, as an enterprise that's using Salesforce for my consumer data, which is very important, I can get access to all the models with Salesforce. So why am I going to go just to Anthropic or just to GPT to get their, Salesforce-like services when I can go to Salesforce, the leader in these services, and have access to all the models? So, disruption, yeah, but how far does it go? I'm really unsure about that. So yeah, I'm calling this an overreaction and a buying opportunity.
Yeah, Salesforce is the first. I know you have some other names to look at, and we'll dive into Salesforce and what's happening with its stock too in just a second. There's one theory that just came out early this week from Goldman Sachs comparing really what's happening in software to how the internet was disruptive to newspapers. And they talked about newspaper stocks kind of going down 95% in the introduction of the internet. Is that potential? Is that comparison fit? What do you think about that discussion?
I think that there is some fairness to the comparison, but I think it still has an apples to oranges kind of quality to it because, software stocks, as I mentioned, AI companies are software and software companies are AI. So the lines are less clear than they were with the internet and print newspaper. So yes, there are some comparisons there, but I don't think that it's quite as cut and dry as it seems.
Well, let's talk into the stocks that you are still looking at as a buy right now, even though the market continues to be going down. I think there is always a risk. I think it's good to talk about as we look at these contrarian picks. Is there a risk that the market is not done falling yet, that this knife could fall even further?
Oh, of course there is, because once you have irrationality in the market and people are selling, fear grips and fear takes control and fear leads. And that is what has been happening. But, even today, looking at some of the charts, there is some bottoming action, and there are certainly some signs to say that these stocks, disruption or not, today they're oversold. They're deeply undervalued. There is potential for rebound. The real question is what gets them started, how high they go, and how sustainable it is over time.
All right, so let's look into the chart for Salesforce and how far it's fallen so far. One thing with this one, and I think it will probably apply to most of the companies we're talking about on this list today, Salesforce still has plenty of revenue coming in. Let's just talk about the earnings
Right.
and what's happening with the stock price.
So that's one of the things that's kind of got me in this contrarian mood is because the companies are still growing. There is some concern for slowing growth, but across the board, we're outperforming expectations and we have profits. Salesforce, as a good example, has recently been kind of boosting its outlook. It's expecting an acceleration back into the double digits, which is more than what the analysts are expecting. So, assuming that they live up to what they're forecasting, we absolutely have a bullish catalyst already in the works. It's just going to come up in the next quarter or two when we start seeing this acceleration, in the numbers. As far as the stock price goes, it's fallen down to what you could consider to be a pretty deep support level. It aligns with bottoming action 2022, 2023. Could be a strong level, a good place for a rebound, but there is also still risk. We fall below this level, the market could drop another, $40, $50 before it finds the next target. But within this, analysts, they're cutting targets, but they're still optimistic, still rating it as a moderate buy, and there's still plenty of upside left. Regarding the targets, this is true for all of these stocks. This sell-off has taken them below the low end of the analyst range. So these companies have 10, 15, 20% upside just to get back in the analyst target range. That's not talking about back to consensus, which is like 50, 75, 100% upside for some of these stocks.
How recently have we seen any kind of analyst revisions that are maybe moving those price targets lower? Is that happening right now? Are they dramatically decreasing their price targets? Or is this more of the market is doing one thing, but analysts are expecting another?
There are some active price target reductions, but it's not like wickedly hot or massive. They're reducing them incrementally, usually in tandem with earnings reports, but the market is selling off far stronger and far harder than these reductions are indicating, taking these markets down to deep value levels.
All right, good discussion on Salesforce. Let's get on to that second stock that you are looking at in software that's oversold right now, but you think could still be a good contrarian buy to consider.
Right. This is Monday.com. Now, this contrarian viewpoint that I've had has kind of been brewing over the last couple of months as I've seen some of these reports come in, and Monday.com's report kind of really catalyzed it for me. So the stock is imploding. I think it dropped like 20% following its release, but we have outperformance. We have strong guidance for growth. We have some internal metrics that suggest that penetration and client gains and RPO all pointing to the guidance being very conservative. So we're looking at outperformance in the coming year, but also the potential for acceleration in the coming year, which is all very good for the stock price. And as far as this stock price decline has gone, just like with Salesforce, this market is well below the low end of the analyst range, suggesting a rebound is inevitable. Right now, the critical support target is near its 2022 lows, which is the all-time low, and that's around $80. So I would look for that level to be a trigger point for the bottom, to see some buying, some active buying, but also for the rebound to begin from that level.
Yeah, Monday.com is a name, like you said, we talked about the last few months on the channel. I think we've talked about Salesforce. You've brought both of these names up before as thinking they were oversold even a couple of months ago. And I think viewers watching then look at what the stock has done now, and it's just gone down since then. I think that is the big concern many investors probably have right now, looking at, is now a time to buy this dip? Because how far could this possibly fall? Let's talk a little bit more about that potential for this one.
We're looking for the floor to be near the $80 level, but absolutely, we could break through that level and continue to fall. As far as looking for entry points, trying to catch that falling knife, you don't really want to try to buy the stock as it's retreating, but you want to look at these technical levels like the one I have here at $80, which aligns with the previous all-time low as a possible trigger point. So if the price action reaches that level and then we get some buying and a bottom to start forming, then that would be a trigger to buy. But if we hit this level and the market keeps selling and then confirms that level as resistance, we're not going to want to buy at that point. We're going to want to sell that stock or short it, buy puts, whatever it is that you do to capture bearish movements.
Yeah, there could be a lot of moves ahead for these stocks. These are definitely risky names to be looking at right now. But I think you and many investors are wondering, is this a good potential to buy a dip and actually gain some growth on the momentum that the stocks are having in their earnings and their guidance and the growth that they're seeing? What about Monday.com makes you think that this stock and this company has potential to withstand the AI changes that have so many people questioning software in the future?
So among the things that Monday.com has going for it that helps assure its future is its highly intuitive and customizable interface. Businesses just love it. And we absolutely see this in the metrics. We've got penetration gains growing at 115% for the large businesses. We've got large clients growing at a 35, 45, and 75% pace across their different groupings. That just shows that businesses really like what this company is doing. It's providing utility and the viewpoint that, AI is disruptive and AI company is going to have to produce a product that's better than what Monday.com is producing in order to take that share and really do damage to their business.
Some really good points. And I think about how many companies already have Monday.com and the software built into their systems. And I think it would take some changes for large corporations or any size company to fully decide to change those out.
One of the concerns people have with the AI disruption is the lack of need for like multiple subscriptions to places. And certainly you might not need to have as many subscriptions to places as these ecosystems flesh out and become more integrated into other systems, but you're still going to need to have probably 2 or 3 or 4 different sources to have a comprehensive good solution.
Well, one thing I want to look at with these companies, Monday.com in particular, what are the insiders doing as the stock price continues to fall? Are we seeing any kind of insider selling or buying happening?
There is some insider selling with Monday.com, but to me, it is not so much a red flag as a near-term hurdle. And what we have is an early angel investor, a 10% owner, has been taking profits pretty steadily since the IPO, presents a headwind for the market, but I don't think it's an insurmountable one. Eventually, he'll have his position trimmed down to where it's too small to matter or where he's happy with where it is, and that headwind will dissipate. Meanwhile, institutions are buying this stock. There's plenty of risks. There's, plenty of concerns, but Monday.com, Salesforce, and the other names on this list are all being accumulated as their stock prices are falling. So I'm assuming right now that the data for February is going to be pretty hot because these stock prices have fallen even deeper into these buy zones.
Yeah, always interesting to pay attention to what corporate insiders are doing and what institutions are doing too. If you want to take a look at some other stocks that have some corporate insiders doing major selling right now, make sure to check out this special report. Thomas also wrote this one. It's on the 12 stocks corporate insiders are selling right now. You can scan the QR code or click the link in the description or in the comments if you want to do a little bit more research into what corporate insiders are doing and which stocks they're selling. But let's get on to the third name on this list, Thomas. What's the next stock that you are looking at in software?
That's Workday.com. And the story with this one is exactly the same. It's been growing at a double-digit pace. It's been outperforming. Analysts have been trimming targets, but still remain optimistic. The market has sold off on fear, has overextended, is trading near long-term support targets, and is well below the low end of the analyst range. One of the things in that Goldman Sachs article that we were talking about before is they think that it could be some time before the market rebounds, and I agree with that. It could take some time. We need to see some stability in the earnings outlook, and right now the fear is that AI will be disrupting that. So it could be several quarters, of steady earnings coming in for the market to regain some confidence, but I see that happening over time.
Yeah, really interesting. Workday in particular is something, many of these names, they're used by many, many companies, used for PTO, all kinds of different systems that, again, these corporations have in place. It's why these companies, software companies, have so many clients. Let's talk about how they might be using AI to incorporate into their business model, making it even more useful, kind of like what Salesforce is doing. Are we seeing that with Workday? Are we seeing that there could be potential for Workday's platform to grow with AI rather than AI threatening the use of it?
So Workday in particular is working hard to incorporate AI throughout its system. It's embedding generative AI and machine learning into all of its core offerings to help businesses adapt and learn and grow. And to me, this kind of sets it apart as a business that's able to scale with these smaller companies. So over time, what I'm looking for is for this company, along with these other ones, to sustain pretty solid net retention rates, which is that measure of revenue growth attributed to existing clients.
All right, a good look at Workday. Again, I am looking at one of these stocks to add to my Britain's Buys watch list. I feel like this is a pretty risky sector to be adding, as several of our recent videos have been more risk-forward stocks to look at, and all of these names are. I do think the one I want to add to Britain's Buys is actually the last name you have on the list today, so let's get into it. It's the one I want to add to Britain's Buys because I think that its story is maybe the most compelling.
Yeah, that's ServiceNow. Out of all these companies, it's among the largest, has the best cash flow, and one of the most robust growth outlooks. It's not going to be growing as fast, but given its size, it's going to be growing at a greater pace each quarter and certainly sustaining value for its investors. We're still growing at a double-digit pace, so very strong company. Margins are widening, supports equity gains. We're not paying a dividend right now, but along with other blue chip tech companies, I would expect this one to evolve to a point where it would have cash flow that it wants to free up or has free cash flow to pay dividends to begin over time. And something else that I'm just seeing here now that's popping up in the news stream kind of goes into that contrarian idea is that I've started to see some analysts make a similar call. Wedbush's Dan Ives, who is very prominent in tech coverage, has added ServiceNow to its watch list, saying that the sell-off is overdone. I see that being true in this market and in all of these markets.
Interesting. Well, I'm glad to add this one to my watch list on Britain's Buys. If you haven't checked it out yet, scan the QR code, click the link in the description to see which other names names we've talked about on the channel recently and how they're performing just in the last few weeks. It could be a wild ride ahead for software. We are excited to see where these stocks go. I know we just had another guest on talking about buy the dip opportunities, and the whole software sector is one area that he talked about. He's looking at it, looking specifically at an ETF as well. Make sure to check out that full video to see all the areas where buying the dip could be beneficial right now and one area you might want to avoid on this downturn.